If I'm loud and clear. I don't know if I'm loud and clear. Yeah, wherever you are able to listen through to hear me right now. Just want to confirm if I'm loud and clear. All right, so if you can hear me, let me know in the chat. If I'm loud and clear, let me know in the chat. Yeah, if I'm loud and clear, let me know in the chat. All right, so ladies and gentlemen, welcome to today's super training. My name is Wealth Coach Julius, and I'll be diving into major insights about our today's training, but most importantly, to make sure that education becomes a key. Okay. Right. Okay. All right. Okay, so those who are following us on all our social media platforms, welcome so much, so many. All right, welcome so much, so many to our call for today. My name is Wealth Coach Julius, and I will be dropping you some major insights, but most importantly, I'll be taking you through an amazing understanding about blockchain technology, Web3 ecosystems, and that's why we are here today to dive into how to use DeFi or how to DeFi. So how to use DeFi or how to DeFi will be one of our major insights, ladies and gentlemen, those that are following us onto our Zoom this morning, over close to 50 participants. Let's keep sharing the link. Those of you who are following us onto our YouTube channel, the Crypto Ambassadors, you are most welcome. And those of you who are following us on the Crypto Ambassador Facebook page and also on the Crypto Ambassador TikTok channel, you are most welcome for today's insight on how to use DeFi. And we shall now drastically and purely drag into our lessons for today. And you are most welcome. Let me know in the chat, those of you who are following us on Zoom, where are you joining us from today? Okay. Where are you joining us from today? Let me see in the chat. I want to make some shout outs this morning. Yes, before we get into our lesson for today. Remember, we have started a very long syllabus that's going to be able to educate and diversify into the Web3 protocols, but most importantly, into decentralized finance. Okay. So we start right away. All right. So let's know where you're joining us from. Where you're joining us from. Where you're joining us from. Yes, we have Mr. One Day is joining us from Chazanga in Luego, that is Uganda. We have Madame Nakitede joining us from Uganda. Sophie is saying, I'm joining you here in Kampala. Yes, Mr. Cash says, I'm here in Chikubo. All right. Happy to have you with us this morning. Herbert says, I'm joining you in Qatar. All right. Happy to have you, my brother Herbert. Okay. Gladys says, I'm joining you from Salama. Yes. Al Ajalilu is joining us from Bulenga. Okay. Ogala Meka is joining us from Kenya. All right. My brother in Singoma from Masindi. Very soon we are going to have a big conference in Hoima. All right, so the Hoima people, the people of Masindi, once again, we are coming back in your area. I want to congratulate and welcome from our mega launch that happened at Golf Course Hotel, where we had over 1,000 plus participants. All right, it was an amazing, amazing, amazing. Yes, Isaac is joining us from Ghana. Happy to have you, Isaac. Okay, Quintico is joining us from Namataba. Yes, Namataba Ginger Road. Happy to have you. Oracle is saying, I'm joining you from Bukoto in Masaka. Okay, Aziz X is saying, I'm joining you from Mukono. And then Grace says, I'm joining you from Luboa. All right. Okay, so today I don't want to take so much time into our sharing. I see people on the other side on TikTok want me to talk about what happened on the crash that happened. I think I'll do a detailed video about what happened. There are so many conspiracies that are happening. People are talking about a lot of things. Exchanges got some troubles because they were not able to act immediately, and the exchanges got affected and they caused more liquidations, they caused more pull downs of markets. But all those, I think I'll do a short video to all the social media platforms and personally dig deep into what I think is the cause of the previous crash. But all that put aside, today we are going to discuss DeFi, decentralized finance. Okay, so yesterday we started our topic on the introduction of DeFi, and we defined DeFi as a decentralized finance. We were able to talk about that for you to participate in DeFi, you need to have a wallet, and different wallets that we talked about. Those in the chat, could you give me some examples of wallets, crypto wallets? Let me see. If you were in yesterday's class, some examples of crypto wallets. Okay, some examples. Oh, Moses, you guys saying I'm joining you from Impiji. Some examples of crypto wallets. Let me know in the chat. Some examples of crypto wallets. Those of you who attended our series of yesterday, examples of a crypto wallet. You see, when I got started in crypto, okay, thank you, Solomon. Solomon says a trust wallet. Okay, Moses Yiga says a trust wallet. Quantico says the phantom wallet. Okay, Bwambale says the token pocket. Thank you so much. Thank you so much. All right. Okay, thank you so much. Mr. Emma says, yes, I'm fine, sir. How are you? That side of TikTok. All right. So we talked about different wallets that we could use. Solomon says the MetaMask. All right. Beautiful. Beautiful. So today, before I dig deep into wallets, like I said, very soon I'll be opening up here and share with you. Thank you so much. You guys say SafePal. The SafePal wallet is a very good wallet with a very good, easy interface. So once you buy your crypto, you can be able to keep your crypto onto your wallet. And ladies and gentlemen, there are different ways where we can be able to access crypto. We could buy crypto from what we call centralized exchanges. All right. Centralized exchanges are platforms that are controlled by a certain group of people. They are centralized. What happens in those exchanges is definitely controlled by the owners of that exchange. And so once you open up an account in a centralized exchange, let's see some examples of centralized exchanges. Let's see some examples of centralized exchanges. Centralized exchanges, platforms, centralized, controlled by certain institutions. Thank you, Binance. Okay, you remember Binance stood out the previous day and said a lot of things happened in their exchange, and they will be doing what? They will be looking through how they could be able to compensate. Some people made some losses, okay? But exchanges remain exchanges. Most of the exchanges from Coinbase to Kraken to Binance, in the crash, they failed to meet up automated orders in time that caused the higher liquidations in markets, which did not happen in decentralized exchanges, like I will be able to share. Thank you so much. We have Binance, we have Bioeconomy, we we have HTX, okay, HTX, okay. We have Jucoin, we have Coinbase, we have Lbank, we have Gladys. Gladys says we have Jucoin, we have Bybit, okay. All these are called centralized exchanges. And for you to participate in centralized exchanges, you need an email, you need a password, okay. And most importantly, that exchange must be working in that area. All right. So all these exchanges, some require you to verify them with your national ID, with your driving license, and for you to be able to successfully be able to transact. What do we use exchanges for? What do we use exchanges for? Before we dig deep, what do we use exchanges for? Very important, very important. Exchanges help on a major function we call fiat to rampant. They help us exchange our money, our local currencies into crypto, and from crypto into our local currencies. Number one. Number two, they allow us to buy and sell. We can easily buy and sell, okay? Because exchanges usually have good liquidity. They have good amounts of money that allow us to be able to buy and sell across different pairs, crypto pairs, which we shall maybe talk about in the near future. The other way we can be able to access cryptocurrencies is through what we call decentralized exchanges. Okay, so once you have a wallet, you will also find that we are going to see in the near few hours from now, once you have a wallet, there is a platform. There is a platform where once you have a wallet, there is a platform on your wallet where you could interact. You could interact with where you can be able to convert from one cryptocurrency to another cryptocurrency. And these are called decentralized exchanges. Okay, so let's start from there. Give me some examples. Okay, someone says exchanges keep our money safe. Never. Someone says that exchanges, centralized exchanges keep our money safe. Never, they don't. Hey, exchanges never keep our money safe, guys. Hey, exchanges can be used to buy and sell, but if you are going long term, you should keep your money out of exchanges. All right? Hey, if you are going long term, you should use centralized exchanges for your trading purposes. Okay? For your trading purposes. Yes, you should use exchanges for your trading purposes. Okay, just to trade. But if you want to go long term, then exchanges are not safe at all, right? It doesn't matter which exchange you are trying to talk about, they remain exchanges. For example, but I will not go pick the example of what happened. What happened when exchanges were not able to cut out certain things in time that caused a bigger dump in the previous crash that happened. Okay, but then let's continue with our class. Okay. Okay, but Binance Wallet, yes, the Binance Wallet is safe because it's a wallet and it's a wallet. I will talk about, I think, that later. Let's stay on point. Let's stay on point so that we go to how to use DeFi. Let's go on point. So examples of decentralized exchanges. It would work best when you give me a wallet. Okay, it will be very good if you give me a wallet and a decentralized exchange. Okay, for example, the Trust Wallet. Once you go on the Trust Wallet, you'll find an amazing decentralized exchange called the Pancake Swap. And here you can be able to convert from one crypto to another crypto. Once you go to the Phantom Wallet, you will find the Jupiter. It's an amazing decentralized exchange seated on the Jupiter protocol. But also on this side, once we get here, those of you on your token pocket, I think now I can be able to show my screen. I don't know how safe it will be, my brothers and sisters on TikTok. You might miss out on this. But those of you who already have your token pocket, Below your token pocket, there is a market area. And this market area, every wallet has a market area, okay, where you could be able to participate in markets. Okay, you could be able to participate in markets, all right? And once you tap on Discover, you'll be able to find different decentralized, like you have Uniswap. Uniswap is here. You have PancakeSwap. So these could allow you be able to convert and participate in different cryptocurrencies. So let's get to the second phase of our sharing, having talked about decentralized exchange. But before I dive into, let me set the mark right. What is the difference between centralized exchanges and decentralized exchanges? Okay, so I want to set the mark right. What is the difference? There is a huge difference. They are challenges. Okay, they are challenges. Okay, there are challenges that happen in both centralized exchanges and decentralized exchange. Someone is asking me about arbitrage trading. Arbitrage trading. I have said it several times. I'll repeat it here, maybe for once. There is no exchange that will accept arbitrage trading. Those of you who are not familiar, I'm in a meeting. Call you later. Those of you who are not familiar with arbitrage trading that someone is asking me, just to keep it simple, is where you go to a certain exchange, buy, maybe Bitcoin is at, let me say, 100,000 in Binance, then it is at 90,000 in HTX. So what do? You buy in HTX, then you send in Binance and sell. Maybe you are doing it personally, but all those arbitrage platforms, they allow you send money to their platform, and it is very easy for you to lose those funds. But okay, the difference between decentralized and centralized exchange, okay? With centralized exchanges, you have the power to convert from your local currency into crypto, and from crypto into your local currency. We have some local currencies that even have pairs. Okay, fiat currencies that have pairs on different exchanges. So it is easy for you to convert that side. While in decentralized exchanges, you are basically able to move from one crypto to another crypto, from one crypto to another crypto, from one crypto to another crypto. Okay? Decentralized exchanges basically help you to be able to do that. You could be able to convert from one crypto to another crypto. But also, there is a challenge in centralized exchanges. For you to use them, you need to, most of them require verification. They have limits and controls that happen. Maybe you are not allowed to transact less than this amount. For example, in Binance, you could not be able to transact less than maybe $10 or $5, depending on the exchange you use. But on decentralized exchanges, you are able to convert even $1. Number two, sending. You may not be able to send $1 from one in within exchanges, but with decentralized platforms, you can even be able to send less than that. So there is that flexibility. But there is a problem. In decentralized exchanges, there is a problem of liquidity. Okay, there is a problem of liquidity. You'll find that there is a challenge of liquidity. Liquidity is money that could be used within the protocol. So it will be a very big challenge. Some of the platforms have challenges. That's why you can become a liquidity provider in decentralized exchanges and be able to earn on that, which in the near future, we are going to be able to dig into that. Okay, all right. Okay, someone says, where can I keep my money safer? If you want to keep your money, then make sure your money is in a wallet. Open up a wallet. Okay, open up a wallet. All right. Okay, now, how do we, having described that, how many are following? How many are learning? Let me know in the chat. How many are learning? Okay. So we want to go to how to use DeFi. How many are learning? Let me see, ladies and gentlemen. Okay. So a simple backup of what we talked about yesterday that I want to emphasize a little bit before I go to today's topic, which I'll keep short and simple. Basically, we went into details to discuss about how the internet has evolved. Many people who are part of cryptocurrency, they think cryptocurrency is all about money. Even me, when I got started into cryptocurrency, every day I was thinking that cryptocurrency is all about money. When I got started in the crypto world, I was about chasing money every single day. Every day, my participation in cryptocurrency was about money. My mindset was about profit every single day. My participation in cryptocurrency was about how do I earn. But ladies and gentlemen, if I tell you that cryptocurrency is bigger than that, cryptocurrency is bigger than just about money. It is the new wave of the internet. And like I said in yesterday's training, that the internet has evolved from us only opening static websites to read information, to us participating in providing information on the internet. And that's what is happening right now. Okay, so maybe I'm on TikTok, maybe I'm on YouTube, maybe I'm on Facebook. I'm able to provide information to the internet. But I tell you something funny, the information that I'm providing on the internet, I don't own it. I don't own the information that I'm providing on the internet. And since I don't own the likes, the followers, if TikTok closed it today, if YouTube closed it today, okay, I don't move with my likes. I don't move with my followers. There's a lot of censorship. They can decide to put my account down. They can decide to take my account away. And I don't own what is happening on the internet. And that is Web 2. So in Web 1, we were only able to participate on the internet by reading. On Web 2, we are able to write on the internet, provide information on the internet, but all this internet is owned by five major companies worldwide. They control the internet. They earn more money on the internet than us. And so Web3, the one we are discussing today, the one that I'm trying to open up, the new wave of the internet, is giving you the power. You who's listening to me, you who's watching me across all social media platforms, for you to have to be part of the internet, to own the portions of the internet. And this became possible. I was here yesterday and I shared with you a simple history. And I told you that DeFi was introduced. DeFi was introduced by Brendan Foster, a co-founder of Daha Labs in 2018, where wrote an article that was announcing as a DeFi, a community of decentralized finance platforms. And the reason this separates Bitcoin from Ethereum is that Ethereum is a platform that allows people to create other applications onto a blockchain. And I told you a blockchain, these are codes on the internet. They are codes. They have been able to develop, like simple terms, a software developed on the internet whose information cannot be changed. And once this is in place, Ethereum opened up a way that me and you, if we agree on something, if we want to own something on the internet, we can create a token about it. Me and you, we can agree on something and create a token about our agreement, and our token exists on the internet. And we own that token. And since we own that token, we are owning part of the internet. And so different developers have created different applications and different tokens that solve different problems on the internet. That's why I repeat it over and over that cryptocurrency is innovative technology. Yes, it is true. Bitcoin introduced easy transfer of money from one place to another. Bitcoin introduced a hedge against inflation. It became a storage of value. But then the coming of Ethereum into the game in 2015 introduced a new wave that me and you, we can agree on something and create a token for it. Okay? And this is done onto a blockchain whose information is not controlled by a single entity. And Ethereum has now evolved, and many other technologies have come about, the likes of Solana, the likes of Binance Smart Chain, the likes of Sui, the likes of Hyper. And by doing this, they have basically been able to create so many solutions on the internet. And today, ladies and gentlemen, we want to learn how we can be able to participate. We want to learn on how we can be able to participate and have portions of the internet. And ladies and gentlemen, Ethereum introduced a mind-boggling ideology called smart contracts. Imagine a contract. Imagine a contract. Imagine a contract. A contract that is seated on the internet, not controlled by a single entity. I have ever before taken you through the evolution of money, whereby our grandfathers trusted something which was gold, some cowrie shells, some salt as medium of transaction. They were trusting something. But when they trusted someone, the coming of centralized banks, the printing of paper money that later happened, has caused a lot of inflation issues because every time governments are bankrupt, they print more money. And whenever they print more money, no matter how hard you work, your money keeps losing value. No matter how diversifying you become, the paper money keeps losing value. And so, decentralized finance ecosystems allow you and me to be part of the internet by allowing our ideologies to be represented in terms of tokens that have value. In terms of tokens that have value. So it is not a big deal. I usually say it over and over for anyone to create a token. Anyone can create a token onto the blockchain because blockchains like Ethereum, Solana, Sui, Tron, Binance Smart Chain provide a room for everybody to get their ideology onto the internet, to own their ideology onto the internet, to provide better solutions onto the internet. And this only happens through DeFi, which we call decentralized finance for us. And for you to participate in decentralized finance, you need a wallet. Okay, you need a wallet. And once you have a wallet, it gives you the power and the ability to participate into DeFi. All right. Okay. Okay, so now, how do we use DeFi? Having understood that these are ideologies, this is innovative technology, how do we participate in DeFi? How do we use DeFi? Okay, so to get started in DeFi, like I said, you need a wallet, maybe one that supports Ethereum, like MetaMask, one that supports Binance Smart Chain, like Trust Wallet, like SafePal, like Token Pocket. These are just wallet. There is no special link. You just go onto your Google Play Store, your App Store, download the wallet. Download the wallet. Okay? And after you have downloaded the wallet, wallets are now compatible to as many networks as possible. For example, if you download one of the easiest wallets, the Token Pocket, it uses different networks. You'll find it's using Binance Smart Chain network. It is using Ethereum network. It is using the SUI network. So different networks are compatible. So you need to be able to download the wallet. Number two, once you get your wallet downloaded, the second step is to write down the 12 seed phrase. Don't keep it online. Don't take a screenshot. Just write it down, okay, and keep it safe. Write it as it is given to you. Don't take screenshot. Your safety of your funds is very key. So once you lose your phone, once you lose your device, just bingo, go to your 12 words, download the wallet again, put in the recovery phase, and get your 12 words written down. So if you want to apply these wallets on a desktop, then you need what we call a browser extension. Once you go to your PC, write in Token Pocket extension, MetaMask extension, Trust Wallet extension, Token Keeper extension. You need an extension. So extensions are created for interacting with Web3 applications. And the reason why we are here is because we are going to be discussing about a Web3 application. And I'm going to be talking about what do I mean by Web3 application. A Web3 application is a decentralized application that is running on a blockchain. Can I repeat again? I see some chats here. Let me check them up. What is a Web3 application? A Web3 application is a decentralized application that is running on a blockchain. For example, I'll take examples for you guys because we're already living in technology. Okay, can you give me some likes? Those of you watching us live onto our YouTube channel, those of you watching us live onto those of you are here on Zoom, please some love hearts if you are learning. Those of you are taking some notes. I have said it several times that your success is simple. Note takers that are action takers are money makers. You take notes, you take action, you make money. I remember 4 years ago when I dropped my medical profession and I decided to understand how cryptocurrency work. Cryptocurrency has not only provided me freedom, but it has given me both financial and time freedom. It is more than money. So your participation in taking notes and taking action is the key ingredient that creates what you are looking for. Yet today I was listening to one of the CEOs of BlackRock, and he was making a very important statement, and he was saying that the United States of America is being able to open up the 40K, which I will discuss maybe later, but the ability for people to participate in tokenized assets, and this will be able to give some good rewards. And he was asked is that why do you encourage people to take risks? This is a $10 trillion. This is a very big company. He said that the only way you can make money is by taking risks instead of your money sitting in your bank account. I think I'll be dropping that video onto my TikTok account and YouTube in the next few hours from now also. But so, a Web3 is decentralized. Decentralized meaning it is not controlled by anybody. Your WhatsApp is controlled by a certain company, and they have the power and authority to censor it up. They can say your account is banned and there is nothing you can do about it. But a decentralized application, there is no single entity. That's why the other time I was speaking to my friends and I was telling them, look, the Oracle app or the Oracle decentralized application, even if you don't have a website, you can access it onto the Binance Smart Chain blockchain, because it is a decentralized application that is running on a blockchain. So let's go. There are major categories of DeFi protocols. These that provide financial services to you. They are lending protocols. You can be able to lend your money. You can be able to borrow. Yesterday, I was telling you about the MakerDAO that allowed people to create and print their own token called DAI. DAI is a stable coin. And they have exchange protocols. People could be able to exchange. So you might want to get started by lending out your cryptocurrencies. I also said it yesterday. When you go to protocols like Yan Finance, you find that they have been able to allow people to participate in yield farming, and you earn governance tokens as a reward for lending out your crypto. But like I said it yesterday, that today we are going to dig deep into something else and different. In the last 4 years, there is a game changer. In the last 4 years, there is a game changer. And this game changer that changed everything that has ever happened in DeFi. And I'm going to today be able to share with you that insight so that you make informed decision. Okay. So let's, gentlemen, in 2021, something unbelievable happened in decentralized applications. Something mind-boggling happened in decentralized applications. I told you, decentralized applications or Web3 applications, these are applications that have been built onto the blockchain. But in 2021, I also didn't know this. That's why I say I remain a learner of this industry. I want to share with you today, those of you following us those of you following us those of you following us on yes, I think we are good to go. Those of you following me or watching us live onto our Zoom presentation today. Okay, so I'm going to travel with you together very fast. Okay, very fast, those of you, and those of you following us on other social media platforms where I can't be able to share my screen, I will just share with you as you will be able to listen. But those of you, so here, I want to show you a project that has created so many multi-millionaires across the world. So many. And at first, I thought I was very smart in crypto until I learned about this. And this is what I will talk about today, because history is repeating itself. Okay. All right. Okay. So, all right. Okay. Okay. I didn't know this, but I'll explain to you. This was one of, I think, the game changer. Okay, so the project I'm discussing is called Olympus. And it will be automatically connected to a project that we are going to talk about today. But then Olympus is an logarithmic currency protocol with the goal of becoming a stable crypto native currency. And though sometimes it can be called a logarithmic stable coin. Let me explain what a logarithmic stable coin is for those of you who are okay, so what is a logarithmic stable coin? This is unbelievable. I have been broke for nothing. A logarithmic stable coin, it uses an logarithm underneath, which can issue more coins when prices increase and buy them off market when prices fall. Remember, all other cryptocurrencies, for example, Solana, Ethereum, Bitcoin, they are affected by macro factors and micro factors in the economic world. For example, they are also affected by geopolitical news. For example, on Friday, yes, there was high leveraging, but the statement that was made by the United States of America that's gonna be able to tariff China 100% caused markets to respond, caused the traders to find safe modes that caused the markets to go a little bit deeper. But a logarithmic stablecoin works on a different mechanism, that when the price is very high, more tokens are released in the market. And when the price goes low, tokens are bought off the market. That causes this logarithmic stablecoin to rise. Now, I thought I knew crypto, but let me this was really a game changer. Now, when I read this, I was like, where have I been? Because for the first time, just a minute, because for the first time, I'll open this. That's why I said crypto is more than money. So let me dig deep. Now I'll focus on what makes this unique. Okay. So Olympus has been called one of the most interesting economic experiments in DeFi, which is decentralized finance, for several reasons. Number one, Olympus owns a treasury that mints and sells ONF when it is trading above a price of one DAI. One DAI is a stable cryptocurrency. Buys back and binds OHM when it is trading below that. Imagine. Most of these cryptocurrencies, for example, Arbitra, for example, Ethereum, they have a mechanism through which tokens are released in the market. For example, if we go to CoinMarketCal, let me just get there very fast. Those of you following us on, if we go to CoinMarketCal, okay, coinmarketcal.com, okay. Let's visit something unbelievable here. This is into details that you'll find that every day we have what we call crypto events. For example, these are crypto events. Like with those following me on YouTube and Zoom, you can see that these are crypto events. And these crypto events, let me just dig deep just here very fast. These are crypto events. These are crypto projects that have different events that are going to happen. Maybe some have already happened. Maybe some are going to happen. But one of the things you will be able to find in these crypto events, okay, is that there is what we call unlocking. I don't see any so far now. There is what we call unlocking. Unlocking, being able to, a platform powers more tokens in the market at once. At once, tokens get locked out. And once they unlock the tokens, the circulation of those tokens increase. It is different with the protocols like Ethereum that use proof of stake. Because in their proof of stake mechanism, they have a way on how tokens come into the market. But there are tokens that allow tokens to be unlocked in the market. I may not dig deep into this, okay? I may not dig deep into this. Okay, this was a snapshot. Wow. Okay, but then I may not dig into this. But you find that tokens are released into the market by the decision of maybe the founders of these tokens. But this created a mechanism. When we go back here on what I was discussing to open up your eyes, what I was discussing to open up your eyes is that they developed a system on how these tokens come into circulation. And they owned a treasury. A treasury is like a store of tokens. And these tokens are minted. And they're only minted when you participate in that protocol. And just to dig deep, just very fast, users can also stake on their protocol. They could stake OHM, which reduces the supply of OHM on the open market, and it creates value for the protocol. And the staking rewards were extremely high, over 7,000%. But it was as high as 100,000% at the beginning of the protocol. Moreover, the staking rewards were automatically compounding themselves. This was unbelievable. Automatically compounding themselves every 8 hours. And the goal of these high rewards is to reward users for accumulating more OHM. For accumulating more OHM instead of hoping for an appreciation of OHM in terms of USD. When I met people into the crypto market space, especially those who call themselves that they know, they always focus on value of tokens in the market. But for the first time, I met an ideology which I never knew about, that I'm trying to share with you, that you start participating in the protocol, no matter how much you invest, but the price of the token is not your subject. Because at the end of the day, when you start with 10 OHM or 10 ONF, at the end of maybe the month, or at the end of the year, or at the end of every single day, you have more tokens than the ones you started with. For example, when someone stakes, because staking means you are buying the tokens from the market and bringing them into the protocol. I'll give an example of ONF for now, all right? I'll give an example of the ONF for now. For example, if someone stakes 50 ONF, I'll take 50 as an example. When someone stakes 50 ONF onto the ONF protocol, at the end of 1 month, they will not have 50 ONF. No. They will have around 62 ONF, which means that they have over 12 ONFs. The amount of tokens, when you buy Bitcoin, you always have 1 Bitcoin, 1 Bitcoin. But when you participate in a logarithmic stable coin, when you stake and reduce the circulating supply of these tokens in the market, if you had 50 tokens, you will now have 62 tokens. You have 12 tokens. And the reason why they are giving you this high reward is that instead of you hoping in the appreciation of the price of the token from maybe $21 to $50, once you are able to get more ONF, you still remain profitable. How many have understood that? Give me a yes in the chat if that message is home. How many have understood that? Let me see. It is not the price of the token. No. The formula is simple. And this has been tested. The reason why I'm sharing you this is because I want to show you a project that has been around for the last 4 years and created multi-millionaires without being on chat markets, without worrying about the price of the token, no matter where the price of the token goes. No matter where the price of the token goes, as long as the tokens are increasing, you remain profitable. Does that make sense? Let me know in the chat. Does that make sense? Let me know in the chat. And the reason why they are paying you is that they want you to focus on how many tokens you make. How many tokens you make. And that there is no special offer. that when you invest $1,000, for you, you will get 8%. And the one who invests $100, for them, they will get 10%. Is that clear? The percentage profitability is the same. Does that make sense? The percentage profitability is the same, whether you come with a huge amount, whether you come with a small amount. It is equal rights for everybody. And like I was trying to explain here on the protocol acknowledges that the price could potentially and should come down against the dollar in the long run. However, the goal of aggressively accumulating strategy, when people accumulate more tokens, they even have the power to go and sell these tokens on the open market. What a business. What a business. Let me tell you guys, for the last 4 years, my participation in cryptocurrency, because I've really made a very good fortune in crypto, I don't deny that. But my participation in cryptocurrency every day was the charts. Every day it was all about buyers are in control, sellers are in control. What is happening? Buyers are active, sellers are dormant. What is happening when this candle, even the candles have names. Candles have names. The morning star, the piercing candle, the bullish engulfing candle, the morning doji, the 3 white soldiers, the 3 black clothes. And it means that the reason why let me try to help those watching me on Zoom. Let me take off my background. Okay. So the reason why I had these charts around me, and I have even those in front of me, I have even some on my table. The reason was simple, is that before I get confused with the market movement, I basically know, hey, now buyers are in control. Hey, sellers are in control. Hey, but do you know that even when that is within your accessibility, still markets will go not in your favor? How many of you connect with me with that? How many of you understand what I mean? I could draw lines. I spent 4 years drawing lines, east, west, center, support, resistance. I spent a lot of years having sleepless nights to understand how markets operate. But even with all that, the market still took a different direction. But now for the first time, I land on an opportunity that the price of the token does not matter. What matters, if I had 5 Bitcoins, am I able to make them 10 Bitcoins? And when I do that, no matter the price of the token, I still remain profitable. And that is the opportunity, ladies and gentlemen, listening to me, that you are able to get. Where is that? Just a minute. Let me see if I could see it here very first. No. Okay. So that is the benefit you get. That is the benefit you get when you basically participate into what we call a protocol that allows you to earn more tokens through their ecosystem. And so some of you have got started with the Oracle. What Oracle is doing is providing 3 major ways. And those 3 major ways are basically the ability to participate in reducing the circulating supply of the tokens in the market. That is through staking. The ability to participate in the market makers and in the treasury. And through that mechanism, the token gets what we call a stable ability to stabilize. And as long as your tokens are coming every 12 hours, you remain profitable. Today, I think it was my main ideology to share. How many of you have questions? How many of you have now understood the philosophy? The OHM token that I talked about has been present for the last, since 2021. How many of you have understood the philosophy that the price doesn't matter? Now I want to go through the oracle and then explain the market makers, the staking, and the treasury. How many of you have understood that the price doesn't matter? What matters is how many tokens you are collecting, because this is a token-based opportunity. The more tokens you collect, the more money you make. Because what makes crypto unbelievable is that it is the success of previous projects. For example, if I knew about OHM, but now I have the power to learn about Oracle and how it works. Now let's just spend some 10 minutes and then I show you how the Oracle DAO tries to bring a stable price in the market. Okay. I believe then tomorrow I'll be bringing another topic. So just a minute, I'm just getting in with my device. Hope my network gets more stable. Let me change to Wi-Fi. Okay. All right. Okay. Just in 10 minutes, we are going to be getting done. Okay, those on Zoom, can you be able to see my screen? So basically now, come onto my wallet. I may not be able to share my screen because those on TikTok, because TikTok may switch me off. But those on Zoom, I hope you can be able, and on YouTube, you can be able to see. So I have a courtesy of different wallets. All those are wallets. Some are wallets, some are not. But I think the first one, Mrs. Leap Wallet, Token Pocket, Token Keeper, MAM, Trust Wallet, Phantom. Station is not a wallet, is a staking protocol. So I'll pick Token Pocket. Okay, so here we go. And I'm already into my Oracle. Now, Oracle has three ways. And I want to explain these three. Number one, market makers. What is market makers? What is market makers? Here in the market makers, you are trying to say that, look here, I have some stable coins. Like you wake up and say, I have some USDT, I have my dollars, I have my Ugandan shillings. And instead of your money sitting open onto your bank account, why not use it? And so you bring your USDT, and what do you want to do? You want to buy ONF at a cheaper price than it is in the open market. It means that the market maker is an area where tokens are printed. So you are buying ONF at a cheaper price than the current price on the market. And so they say, if you want to participate in 30 days, We are now selling this token at $48. Yet the token is at 21. It means on 30 days, they have no discount for you. 90 days, they are selling the token at 32. No discount for you. 180, $30. 360, $28. It means that since the token is at $21 in exchanges, you cannot be able to buy it at a discount on the platform. So here, they are not selling to anyone because they are selling it at a higher price. What are they wanting to do right now? They want you to participate in staking. So what is staking? You go to open markets like Lbank, Jucoin, Bioeconomy, CoinHome, buy the token at $21, come and stake it, either for 24 hours, either for 30 days, either for 90 days, either for 160, either 360 or 540 days. When you stake, you will be able, number one, every day to get part of your capital. Every day to get what they call a block production reward. Every day to get a bonus. Why? Because you are reducing the circulating supply. So you are using your tokens to earn you more tokens that you can go and sell on an open market. And as you are doing this, you are reducing the circulating supply of the token in the market. And in reward, you are getting more tokens. Does that make sense? Does that make sense? Let me know in the chat. And the other way is to participate in the treasure. If the price of the market goes more too high to avoid what they call a rug pull. I like this philosophy. To avoid what they call a rug pull, they will now open up the treasury. The treasury is meant to print more tokens in the market and bring the price of the market down. And so there is now no discount on treasury. There is no discount on market makers. Now what they are trying to run is automatically to reduce the circulating supply of the token in the market. But remember, the only way these tokens come into the market, because the tokens are already onto a smart contract. How many? 80 million tokens. The only way these tokens enter the market is when people participate either in market makers, when people participate in staking, and when people participate in treasure. If people do not participate in any of these three, tokens do not come in the market. It is not like other businesses where tokens are released after every certain period of time. The only way these tokens come in the market, is when people stake. Because when you stake, you get more tokens. And when you get more tokens, you take these tokens and sell them on the market. When you sell them on the market and I want to participate, I go on the market, buy the tokens, lock them up, and then that's how I also get more tokens. How many have understood? How many have understood? So the more tokens you earn, the more profit you make. The price doesn't matter. What matters is how many tokens you collect along the lines. No pressure. No pressure. I have said it several times. This is not done by humans. There is no human being that is seated on the blockchain. That's why those of you who are following, I can check everything that is happening onto the blockchain. I can check everything, every little detail of a transaction. It is being run by smart contracts and agreement onto the blockchain. That when you say, I want to participate in 30 days, it is an agreement of 30 days. And the rest is history. And now that the Oracle DAO is introducing another approach of banning these tokens in circulation, which is kicking off very, very soon, it means the protocol is now going to reduce the circulating supply. Apart from you buying the tokens off the market, they are also going to start banning the tokens in the market. And once the tokens get banned, there is limited supply that will automatically affect the price of the token to rise. Now, not only that, more user cases. The Oracle DAO has already introduced the U card, which all of you who are watching me online, you can now be able to participate. You can get a Visa card. You can get yourself a crypto-based Visa card. When you open your Oracle DAO here at UCAD, you can have a physical card. Very soon, all of you are going to be able to apply for a physical card, a physical Visa card that you can be able to access. Someone is asking what is a smart contract. A smart contract is a coded agreement. Is that clear, Alan? Alan, is that clear? It's an agreement that is seated on a blockchain that runs on codes. It's a self-executing agreement. It is automatic. Okay, so you can be able to access virtual cards right now. You tap on Visa. Since I got an opportunity, I'll be one of the few Africans receiving a physical Visa card. I thought right now to apply to get a digital card because I'm getting a physical Visa card. But you can enter the code of your country here, 256, for example. Then you enter your numbers, okay? Those of you. Okay, then you enter your email. Then you enter your email. So after entering your email, these are the steps. And you'll be able to get a virtual card, then you apply. So to get this virtual card, you need to pay 50 USDT. I hope all of you have seen that. You will buy it $50. I think in the evening call, I'll load $50 here. You'll need 50 USDT onto your wallet. You'll be able to get yourself a physical Visa card. And this Visa card will be used to do WeChat Pay. Remember, this project started all the way from Korea and China. You can use it for Apple Pay. You have any payments on your Apple, okay? Choose a suitable bank account based on your payment scenario. So you can be able to use this so far for WeChat Pay, Alipay, and Apple Pay. Okay, so if you have an Apple, you can be able to pay for services online. And you know Apple Pay basically transacts across all those transactions. And more services to be opened, but currently there you can be able to use your cryptocurrencies to get yourself a virtual Visa card. All these utility in place, they will automatically cause more user case and cause the price of the token to be able to rise. Okay, so once they open up the Visa cards for everybody, I think you'll be able to access the Visa card and be able to get it at the right time. All right, guys, were you able to learn something from me today? I hope it was a perfect sharing for today. I hope that's enough for today. We shall be able to continue still tomorrow, be able to give you the ability to connect with the amazing power that sits in blockchain technology, and most importantly, in Web3 that allows us to have such services and get our finances to the next level. I love you all thank you so much for attending today of our class. See you tomorrow. Make sure tomorrow you come with a friend because I'm still digging deep and I have a long journey to go, guys, with you. You have a long journey to go very hard with you. Okay. Okay, so don't worry. We shall now later dig into these wallets and see how all this work for the benefit of everybody. Love you all, ladies and gentlemen. My name remains Worth Coach Julius, the crypto ambassador himself. Love you all, and our team is called the Crypto Ambassadors. All those that are calling that name themselves, guys, run away. But we remain the Crypto Ambassadors, and we are able to make sure, like our vision is to provide a educative information that can allow our people earn regular, repeated, recurring income. So we believe you need money every single day. We believe you need to earn money every single day in a simple way by leveraging blockchain technology, by leveraging Web3 technology, by deciding to take charge of the information that is available through our networks, through the people we know, so that we take charge of our future. We love you all, ladies and gentlemen, and see you on the next call tomorrow, 10 a.m. East Africa Standard Time. Thank you so much for attending today. Remember, not takers, that are action takers and money makers. Yesterday, I think I need to define again what entrepreneurship is all about. Entrepreneurship is the ability to take risks and be able to convert the factors of production, to use them, the factors of production with creativity to create results. And so tomorrow I'll dig deep into how you benefit through staking. What strategy can you use in staking? How do you benefit if you build a community of stakers? What can this do for you in the next 6 months from now, 3 years from now, 3 months from now, 90 days from now, and be able to create regular, repeated, recurring income? See you tomorrow at 10 a.m., where I'll dig deep into those two major strategies: how to stake right to keep winning, how to create a passive income on a monthly basis. Then later I'll dive into what is your benefit. What is your benefit if you decide to build a community of people who are earning rewards, who are able to stake and earn rewards? So feel free to reach out and be able to start your crypto staking journey, because, ladies and gentlemen, taking action is the only way you position yourself in the future. Love you all, and boom.